Ladies and gentlemen, we are back with another Mining CEO video. Today, welcome to David Cole, CEO of EMX Royalty. Nice to see you after around 6 months, David. How are you?
I'm doing super well, Jan. Great to see you.
Today, we give an update for our audience, what happened in the past 6 months. Okay, nevertheless, we will have some people who are not familiar with your company yet. Please give us a very brief summary. What is EMX about?
My pleasure. Yeah, my pleasure. So EMX accumulates royalties on metal operations around the world. I will point out that royalties are phenomenal financial instruments because they have embedded optionality for discovery on those properties, commodity price optionality, and it's a slice off the top from production. And so royalties are known to be financial instruments that everybody loves to own. We accumulate royalties in a unique way. We generate them. We're called the royalty generator, Jan, as you know. And we do that by utilizing our geologic skill sets to acquire prospective mineral rights around the world, add value by coalescing geologic data and collecting new geologic data, building models for how discovery can be made, selling those assets to an industry hungry for new discovery opportunities in exchange for cash, shares, work commitments in ground, and always a production royalty at the end. And we've been doing this for 17 years. We have over 300 mineral property positions around the world, 200 of which are royalties. We also buy royalties that someone else has created to augment our portfolio. Some of the key assets within our portfolio we have purchased. And then we also make strategic investments utilizing our business acumen and geologic intelligence in other companies. Our strategic investing has paid off handsomely. We have a strong treasury, no debt, lots of mineral properties around the world.
That was a good start. Now let's go through what happened in the past months. TMOG is your company maker, as you call it, and that's true. And there were a number of news releases relating to TMOG. The Chinese Zijin Mining are giving power to bring it into production. And I saw they schedule for the commercial production in the second quarter this year. So it's very close. Please give us an update. What's going on here?
So we've been told that the ceremony is scheduled for June for the opening of the mine. That's 2 months away. We're very excited. And Xinjiang has that on their website. They have advanced twin declines into the mineralization as well as twin shafts to develop the underground infrastructure to produce from the upper high-grade zone and then ultimately get to the porphyry zone at depth, which is huge. This is Europe's largest ever discovered copper gold deposit. It will be Europe's largest ever copper gold mine. We have a 0.5% royalty covering the deposit. We're extraordinarily excited.
So we are waiting for the ceremony. Then you also went back to the #1 gold camp in Canada, Red Lake, and bought a portfolio of properties there. Give me a summary about this deal.
I was just reviewing, in response to your question, I knew you were going to ask this question. I looked at our map and we have just a whole host of royalties that go across the Red Lake district. I will point out that we bought this very inexpensively. We bought these royalties and mineral property positions for 3.5 million Canadian dollars. We expect for it to pay for itself in roughly 3 years in cash and share payments. None of those payments are production payments. Those are all pre-production and lease and option payments that come in part and parcel to the deals that were written. And I mentioned that we're a royalty generator, but sometimes we buy royalties, Jan. This is an example of us buying a portfolio that another private royalty generator produced in his lifetime. And so he built this portfolio up doing his work privately, sold it to us for 3.5 million Canadian. And we're delighted to have this portfolio. We're delighted to have it pay for itself in 3 years and be exposed to all those royalties. Another example of optionality.
Sounds like somebody who wanted to retire.
Yeah. The funny thing is that he said he wanted to retire, but now he's out doing it again. So
once in the industry, you never can go out.
That's right.
There was another very interesting deal. I read it about several battery metal projects in Norway and Sweden, and you intend to work with your proven model again, and you found a partner there. Give us a summary how this deal works.
So Throughout our history, we've been copper and gold focused. And I would point out that copper is one of the most important battery metals, but we've been copper and gold focused for our whole history. But zeroing in anticipation of the electrification of the globe, we realized early on that we should be acquiring what we call battery metal projects. And these are associated with a specific geological environment. For sulfide nickel, they're nickel, copper, cobalt, plus or minus platinum group elements. Each one's a little bit different with respect to the ratio of those metals. We call these projects battery metal projects. We've been acquiring them for years. And one of the areas we've focused on for that acquisition has been Fennoscandia, specifically Norway, Sweden, and Finland. So we have more than 15 battery metal projects in the portfolio. I believe we did sell 5 of those to Ellis Industries, a private startup company focused on development of battery metal assets. They will be drilling and advancing those assets in the near future. But we have a whole portfolio of more of those that we will be selling to the market. And I will say that the market for discovery in this arena is strong.
And I read that your British partner is a private company. It looks to me that this might be an IPO in the near future. Do you think?
Yeah, that would be commonly the case. And as you've seen our deal flow in the past, we do 2 types of deals. We sell to major companies for work commitments, incremental advanced royalty payments, and a production royalty at the end. We love those deals. But we also do deals with junior companies, many of whom are private and with the view to go public. And those are the exact same structure, only they include shares as well. And we've done very, very, very well with the share payments that our partners have paid us over time. That gives us another degree of optionality within that deal. So we have the royalty on the back end, we have incremental payments coming in, we have the shares, and we can decide whether we hold the shares, sell the shares, all to the benefit of our shareholders.
And we mentioned the TMOG already that starts in early summer, but there is another one coming online this year, and this is the Esan project in Turkey with your private, not stock-listed partner, the Baldia lead zinc silver project. When do you expect this to start, and do you have a rough number? How much could this create in terms of cash flow?
Yeah, it's very exciting times. So here we have these 2 big royalties that are about to cash flow. We expect that to drive continued repricing of our enterprise, but specifically the Baldia lead zinc silver deposit, great example of the execution of our business model. Esan is doing a fabulous job. There's already a shaft that goes into the mineralization. They've done test mining. The metallurgy is excellent, but they're now putting in a rubber tire decline down into the mineralization so they can mine it with modern technology using rubber tired equipment. They have a 5,000 ton per day mill already built, tails pond already built, proven that the mineralization has a high recovery rate. They will go into production late this year on a small scale, with the production ramping up through 22 and 23. I would expect us to receive, by the time we get to 23, $4 to $5 million per year. This is going to be our largest cash flowing royalty in the portfolio. But I will make sure the investors understand it's not going to start off right away at that rate. It will increase over the course of about a 2-year time frame.
Sounds very good. And there were a number of smaller acquisitions that I read about. There was copper projects in Arizona, a gold project in Idaho. So I can imagine it's really tough to keep the overview here. Please let our audience know what you consider most important from that moment on until now. Which were the most important deals?
From the shareholders' perspective, the most important deal is that we're always acquiring more prospective mineral rights around the world, and we're always selling them on and keeping royalties. That's what's important. And so it's that overall machine that's just acquiring mineral rights, adding value, selling them, keeping royalties, getting paid in shares and cash, doing it again, and building out our pyramid. And I know you like our pyramid and the embedded optionality. There's over $20 million of money going into drilling our projects, and we get no invoices, right? That's all to someone else's account. We're just along for the ride as royalty holders and as equity holders in those companies. It's a fantastic model. But I can always pontificate about any specific project and say, oh, I really like this one, or I really like that one. Truth of the matter is we love all our projects. But But I will say this, that the recent press release that highlighted the Yarl project and the Stedman project in Australia, those two in particular, to me, have meat on the bone. I'm astonished that we were able to purchase those assets so inexpensively. It's a geological model that when those projects were last worked on 20, 30 years ago was not well understood. We now understand that geologic model for those types of gold systems very well, and we view it to be distinctly prospective. So I'm particularly excited about those two.
Great information. And the most recent news release that you published was about a base shelf prospectus for $200 million. So you seem to have already something in mind that you want to grab if the opportunity presents itself. Or what is the purpose of this?
Yeah, so I have gotten a few questions about that. I appreciate you bringing it up. We have absolutely no plans to raise money. We have a strong treasury. We have no debt. That is entirely put in place proactively, just in case some major opportunity were to be, or a small opportunity. And so just so you know, when you file a shelf filing, this is an example of us maturing and becoming, a larger company that we were able to do this. And when you file it, you can't increase the amount of money that you're able to get. But you can decrease it. So just because we filed 200 million Canadian dollars doesn't mean we're going to raise 200 million Canadian dollars. That's just the upper limit.
Thanks for the explanation. And finally, David, the silver price, well, we are expecting a bit move. Let our audience know what's your opinion about silver and I expect the coming commodity bull market in general.
So yeah, I'd rather comment on the commodity market in general. And I'll say that continued demand growth across the globe from lower middle class people becoming middle class people and increasing consumption habits. And there's examples of this across the globe. We call it class creep. It's been going on for our whole generation. And that continues, and it continues to drive consumption. And copper is in everything, right? It's in every refrigerator, every air conditioner, every radiator. It's in plumbing. I mean, you go on and on, electrical wiring, batteries, and copper is just one example. And so we just see this increase in metal consumption across the globe. I'll use copper as an example here. We expect the globe to consume conservatively in the next 25 years as much copper as has been produced throughout all of history. And if you think about that, that means every copper mine has to be double its size in the next 25 years. So this is phenomenal. And then, but silver's on the list, gold's on the list. Let's talk about precious metals for a moment. I think we're in a metal cycle overall, but precious metals in particular are going to be in demand because of very loose monetary policy on behalf of governments around the world, perhaps the loosest monetary policy on behalf of major economies in history. That is dilutive to the value of those currencies long term. We all know that, which is accretive to the value of gold and silver as denominated in those currencies. So we see strong demand. We love all the metals. Silver's great, gold's great, copper's great. We particularly love nickel.
That was a great final statement, David Cole. And people who like your company or who wish to have more information, find some below in the video, in the description box, and on Goldseiten also. And it seems to me your stock is consolidating on a high level and preparing for the next leg upward. David Cole, I thank you. We have overcome the technological difficulties and made, I think, an interesting interview. Thank you for today and have a good day in Denver.
Thank you very much. Look forward to coming and visiting you soon.
I hope so too. Thank you. Bye-bye.